No one likes to pay more interest on the mortgage than they need to, so here are my hints and tips on how to pay your mortgage off early. So a lot of these things are surrounding overpayments. So most mortgages you can overpay by 10% of your capital balance each year with no penalty. That's if you're tied into a fixed rate mortgage. So to make it simple, if you're £100,000 outstanding on your mortgage balance, then on top of your normal contracted monthly payments, you could overpay up to £10,000 in that calendar year with no penalty whatsoever. So check the T&Cs on your mortgage, but that's pretty standard across the board with different mortgage lenders. So you can make those overpayments in two different ways. One, by lump sum overpayments, and two, by regular monthly overpayments. If you're going to do it on a regular monthly basis, I recommend that you set up a standing order to go out of your bank on the same day that your mortgage direct debit comes out. So if your mortgage goes out on the 1st, you set up a standing order also to come out on the 1st. The difference between a monthly standing order and a monthly direct debit is, on a standing order, you as the consumer, you're in control of that payment. So a direct debit, the bank would take care of and request. Standing order, you as the customer controls. So if you set it up for £100 a month, and then after 3 months or 6 months you have some event that means you can't make that capital overpayment in that particular month, you can just cancel your standing order, so you're in control of that. In terms of lump sums, how you pay, you get on the phone, ring the bank and make a payment kind of over the phone, or go into branch if your lender has a local branch to make that overpayment. The impact of making these overpayments will shrink the mortgage term. So if you take the average mortgage in the UK, which is about £130,000 in our area, then overpaying £100 per month all the way through the mortgage term has the impact of reducing your mortgage by approximately 5 years. So a 25-year mortgage will be paid off in 20 years. And that could be the difference of you retiring early or not. And the earlier you can start making these overpayments, the better. The other thing you can look to do to shrink the term of your mortgage is to always ensure that you're on the best deal. Okay, so when you've took out your original mortgage, you've shopped around, or you've come through a broker like ourselves, try and get the cheapest deal available. So it's important that you're on the best deal all the way through. So what we offer as a service is our free mortgage monitor, where we check that you're on the best deal right the way through the mortgage term. So not just the first 2 years or the first 5 years. So where the system is always on, so your mortgage is going to be checked 365 days a year to check that you're on the best deal, even taking into account early repayment charges. And when the time comes that your deal's coming to an end, or we identify that we could be saving you money to swap to a different provider to get a better deal, then we'll reach out and we'll be in touch with you. So you don't have to worry about always being on the best deal. So if you'd like some information about that, please drop us a line. We'll get you signed up to the mortgage monitor. But in the meantime, those are my hints and tips on how to get your mortgage paid off early. Thanks for watching. If you're in the market for mortgage advice, please drop me an email, malcolm@ukmoneyman.com, or give us a call, and please subscribe to our channel.